Chapter 6, Insurance Company Operations. In this chapter, we will learn different departments under an insurance company. Some positions are related to business students, so let's take a look. The first section, Basic Company Functions. Since insurance companies sell insurance products, there must be a department responsible for product prices. And we call the pricing of insurance products rate making. And these rates and premiums are determined by an actuary. And how to become an actuary? You need to pass several exams held by the Society of Actuaries to be qualified as an actuary. An actuary uses the company's own experience and industry statistics to decide the appropriate insurance premiums. There is a term you need to know, a rate. A rate means the price per unit of insurance. For example, today if you want to purchase a life insurance policy, your agent may show you a price list, like this one. This list shows you the cost per 1,000 face amount each month. So for example, if you are under 25, you want to get this 1,000 face amount, this $1,000 is our unit. Okay. You need to pay $0.05 per month. And this 0.05, we call it rate. And you can see here, for life insurance policies, older people need to pay higher insurance premiums, so they have higher rates. Let's see the next department, underwriting department. Underwriting department is also very important. An insurance underwriter needs to select, classify, and price applicants for insurance. An insurance underwriter needs to decide whether or not to offer insurance. Well, we already learned it. The purpose of underwriting is to reduce adverse selection. So the underwriter needs to make sure that the customer is healthy. If the customer is not healthy, well, either the underwriter reject the application or ask this customer to pay higher insurance premiums. Usually, insurance underwriters will put their customers into 3 categories based on the customer's risk level. Customers who are in excellent health fall into a normal height to weight ratio and have a favorable family health history can enjoy the best insurance rate. And we call these rates a preferred select rating. In other words, these customers pay the lowest insurance premiums for the same coverage. For other average applicants, they belong to non-tobacco rating. Some insurance companies also include people who smoke occasionally or participate in minimal tobacco use. These customers pay the average insurance premiums. And for regular tobacco users, they belong to a standard tobacco rating group. They need to pay higher insurance premiums. because they are more likely to have some other health problems, and their life expectancies are shorter than other people, normal people. Of course, if this customer is really in bad health, the insurance company will reject the application. We know that during the insurance underwriting process, the insurance underwriter can ask you to provide your physical examination report. The underwriter can also ask you your health history. An important question is that can insurance companies require information about genetic testing as part of their application process? Genetic testing is a type of medical test that identifies changes in chromosome, genes, or proteins. A genetic testing basically is analyzing a DNA to look for genetic alteration. And why do people want to have genetic testing? Some parents want to find out genetic disease in unborn child. And for some people, they want to know whether they carry genes for a disease and might pass it on to their children. Some parents also want to screen embryos for disease. People who doubt that they have genetic disease can test before they cause symptoms. Genetic testing also help make a diagnosis and help doctors to figure out the type or dose of a medicine that is best for a certain person. So overall, genetic testing helps a lot. Today, if you want to have genetic testing, it's super easy. Have you ever heard this company, 23andMe? 23andMe is a privately held company in California. And this company provides a direct-to-customer genetic testing service. You can buy their product online. And what you need to do next? You only need to provide your saliva sample and then send it back to the company. And after the lab get the results, they will upload the results to your online account. You can log into your account to see the whole report. For example, the report will show you whether you have alpha-1 antitrypsin deficiency. This is an inherited disorder, and this disorder can cause lung disease or liver disease. Now the question is whether insurance companies can use these genetic testing results to select their customers. Okay, so can the results of this direct-to-customer genetic testing affect the customer's ability to get insurance? In 2008, a federal law called the Genetic Information Non-Discrimination Act made it illegal for health insurance providers in the U.S. to use genetic information in decisions about a person's health insurance eligibility or coverage. In other words, health insurance companies cannot use the results of a direct-to-customer genetic test to deny coverage or require you to pay higher insurance premiums. However, this act does not apply to other forms of insurance, such as disability insurance, long-term care insurance, or life insurance. So in other words, if you purchase other insurance products, okay, not basic health insurance products, the insurance company still can use the result of genetic testing to make a decision. Be careful here. During the underwriting process, the insurer may ask you whether you've undergone genetic testing. You need to disclose it. Okay? You need to be honest. Even if the testing was performed through a direct-to-customer site like 23andMe. The main problem is that direct-to-consumer tests are easy, but they are generally much simpler than genetic testing performed in clinical settings. The reports are also simpler. So if the insurance company doesn't read carefully, the insurance company may misinterpret the results. So think twice if you want to have these direct-to-consumer tests. During the underwriting process, your insurance company can ask you to provide this genetic testing if you have undergone these tests. Of course, if you get genetic testing after you have a policy, okay, after the insurance company issue the insurance policy, your insurance company cannot use the results to cancel your insurance policy. Let's go back to our lecture notes. We know that the purpose of underwriting is to reduce adverse selection. Okay, is to select good customers. And the basic principles of underwriting include what? First, attain an underwriting profit. By choosing good customers, okay, we make sure that these customers are healthy. Okay, this can help us to increase our earnings, our profit, okay, because we have lower claim payments. Next, select prospective insureds according to the company's underwriting standards. Okay, so the purpose is to select healthy customers. And next, well, we already said it, okay, to reduce adverse selection against the insurance company. The final principle provides equity among the policyholders. If the insurance company allows the unhealthy customer to pay the same rate, same insurance premium, it's unfair for the healthy customer. We know that the insurance premium is based on the past experience, past customer experience. So theoretically, healthy customer can pay lower insurance premium. Now, if the healthy customer and the unhealthy customers pay the same rate, it means the healthy customer subsidize the unhealthy customers. So to provide equity among the policyholders, the insurance companies need to do the underwriting. Let's move to the next function, production. Production means the sales and marketing activities of insurers. Okay. It doesn't mean the product pricing. It means the sales and the marketing activities of insurers. And who are producers? Agents. Agents are often referred to as producers.